There's a Chinese proverb that says, give a person a fish and you feed them for a day, but if you teach a person to fish, you feed them for a lifetime. But not you. Oh no, you don't want to be taught to fish. You want that thing caught, cooked, and delivered right to you. Well, guess what? You're in luck because we have 19 fish that were caught with the Seeking Alpha Quant system. What's the Seeking Alpha Quant system, Uncle Russ? It's basically an intelligent computer system that looks at over 100 metrics like how cheap a stock is, how fast it's growing, how profitable the company is, then compares it to other stocks in its sector, and then spits out a grade to help investors like you decide what to buy. And what's up? I'm Russ of the legend and lore of the Dapper Dividends world, where I'm sharing my passion for passive income with all every week. But it gets better. You can save $30 off an annual premium subscription to Seeking Alpha and be given fish all year long for just $269. Now this applies to first-time subscribers, so if you've already subscribed to Seeking Alpha, hey, just use a different email address and see what you can get away with. Now I'd also like to tap into the quant that's inside your head, and if you'd be so kind to share with us what you think is a strong buy stock, share that in the comments below with all of us. And now we'll be whisked away to the land of seekingalpha.com, and I'm going to show you exactly how to find this screener. So you'll look right on the bottom left here of the black panel where it says find and compare. Go to stock screener, click it. Now Seeking Alpha has a whole bunch of pre-built screens. You can create your own screens and save them. Things like the top rated stocks, stocks by Quant, like we've talked about, value stocks, China ADR. It's pretty in-depth. You can knock yourself silly, spend all day on Seeking Alpha. But what we're going to look at is the top Quant dividend stocks. Those are stocks with high Quant ratings for dividend safety, dividend growth, dividend yield, and dividend consistency. Now we're going to look at all 19. We're going to move very quickly, but I'm also going to use the Simply Safe Dividends website for their stock card and the nice little chart of dividend growth. And the magic just keeps on going because you can also use Simply Safe Dividends free for 2 weeks. Just give them your email, no credit card, no nothing even needed, and that's it. And then if you want to keep using it, you got to pay them. I'm not an affiliate. I'm not associated with them. I'm just a happy paying customer. So I hope you made yourself comfortable, but we're going to go quick here. So first up, Vici Properties has a quant rating of 4.90. And then remember, you can pause the video, see the Seeking Alpha analyst ratings, and then they also have Wall Street analyst ratings, market cap, dividend yield, and now there's a lot of other things you can sort for by clicking on these tabs up here. But again, we'd be here all night, and I just want to share these 19 picks with you, and let me know if you like any of them or if you're buying any of them, because I'm buying Vici Properties, ticker VICI, which has a borderline safety score from Simply Safe Dividends of 50. They've been growing that dividend for 5 years since they went public. They have a 10% 5-year CAGR, and they grew at 4.2% in September of 2024. Next, we have the Allstate Corporation, ticker ALL, also has a quant rating of 4.90. The property and casualty insurance company that most of you probably know has a dividend safety score of 80, safe, 7% 20-year CAGR. They've been growing it for 13 consecutive years, and the last increase was 3.4% in February of 2024. Number 3, with a 4.89, Gilead Sciences, ticker GILD. The biotech company has a dividend safety score of 70, safe, 8 years of consecutive growth, 6% 5-year CAGR, and it's a slow grower lately, 2.7% raise in February of 2024. Number 4, with a 4.8 quant rating, the Travelers Company's, ticker TRV. Property and casualty insurance company has a dividend safety score of 78, safe, fast 20-year CAGR of 9%, 5% raise in April of 24, and an 18-year dividend growth streak. Look at that. Number 5, with a 4.77 quant rating, Raytheon Corporation, ticker RTX. Dividend yield of 2.14%. I guess I could have said those, but look at the other ones for the yield, and then you can see on that little chart there if it's above or below the 5-year average. It's always a nice thing when you can buy when that is above the 5-year average, but it's not a deal breaker. dividend safety score of 70 safe for RTX Corporation, 7% 20-year CAGR. Now that does show a cut, but I do believe that is when they spun out Otis and Carrier. So the dividend investors were not made whole, meaning that when you got those shares of Carrier and Otis and you combined the dividends that they paid with RTX, it didn't add up to what it was before the spin out. But either way, they've been growing that dividend for 2 years. Number 6, Philip Morris International, ticker PM, with a 4.76 quant rating. Yield of 4.26%, which is way below the 5-year average. 64 safe safety score. Some of these high growers, they grow the dividend very slowly, so 10-year CAGR of 4%, which is slow, 15-year dividend growth streak, and they raised that dividend 3.8% in September of 24. Number 7, Mercury General Corporation, ticker MCY, 4.74 quant rating. Yet another property and casualty insurance company. This one has a borderline safety score of 45, so the lowest we've seen so far. They may be undervalued. There's a valuation tab there if you hadn't seen that yet. This one looks a little bit like a bucket of yuck because they've been cutting their dividends since just after the pandemic. Negative dividend growth the last 5 years, so I'm just not going to buy a dividend cutter that I really don't understand right now, so this would be a no-go for me. Number 8, Victory Capital Holdings, ticker VCTR, 4.73 quant rating. Now it's an asset management and custody bank, 2.74% yield. They're unrated. Doesn't mean that it's not a safe dividend if it's unrated, just Simply Safe hasn't gotten around to giving them a rating yet. Now it looks like they've been growing that dividend for at least 5 years. They're a smaller mid-cap company, so but they did raise that dividend 28% the last full year growth. Number 9, we got Northrop Grumman Corporation, ticker NOC, with a 4.72 quant rating. Another aerospace and defense company, 90, very safe safety score, 1.72% yield. They've been growing that dividend for 20 years. Nice little streak they got growing. They grow it very fast on a 20-year CAGR, but 10% raise in May of 24, so very nice Northrop. Number 10, Snap-on Incorporated, ticker SNA, 4.65 quant rating. Safety score, the highest rating you can get, 99, very safe, 2.41% yield, which is below the 5-year average, and yeah, they look pretty overvalued. They're about $355 a share right now. Pretty cool. They've paid uninterrupted dividends for 85 years, but they've grown it for 14 consecutive years, and they grow that dividend pretty much very fast. 10% 20-year CAGR and a 15% raise in November of 24. Number 11, John Wiley & Sons, ticker WLY, 4.64 quant rating. Safety score of 70 safe, 3.08% yield. So John Wiley's been growing that dividend for 30 years, but honestly, since about 2019-ish, you kind of need a microscope to see those dividend increases, as attested to their 1% 5-year CAGR, and their last raise was 0.7%, just to keep that streak intact, John Wiley. Number 12, we got the Hackett Group, ticker HCKT. Hey, it's Friday the 13th as of this recording. I love it when they're hacking and slashing, and they have a quant rating of 4.63. So the IT consulting company has a dividend yield of 1.38%. They're unrated. They grew that dividend for quite a while, but it looks like it's a little bit frozen here as they did not increase it over the last full year, but they have a 16% 10-year CAGR. This one's been on my watch list for a while. Number 13 here, Allison Transmission Holdings, ticker ALSN, with a 4.63 quant rating. So they do transmissions for medium and heavy duty construction equipment. They have a dividend yield of 0.86%, which is a mile below their 5-year average. Borderline safety score of 50, and they look like they are overvalued. But they do grow that dividend pretty quick. 4-year dividend growth streak. It was frozen for a whole bunch of years there before they started raising it again, but uninterrupted dividends for 11 years. Number 14, MGIC Investment Corporation, ticker MTG, with a 4.62 quant rating. So they do commercial and residential mortgage finance. I know that because it says it right there. 2.12% dividend yield, another unrated. They're a $6.3 billion mid-cap company. That dividend growth, a little bit suspect here. I would not be buying that for the dividend as it looks like it was cut big time and it was non-existent for most of the teens, but they did start raising it in 2018. And yeah, they're growing it quick now, but makes you wonder when we hit some tough times in the economy, what's going to happen. So 19% full year raise. So good for you, MGIC. This is a company near me. They used to be called Corn Products. Ingredion Incorporated, ticker INGR, 4.61 quant rating. And another 99 very safe safety score, 2.22% yield. Another company just way below the 5-year yield, but they look reasonably valued. They also have a 13-year dividend growth streak. Hey, lucky 13 going on, but they raised that dividend pretty slow. It was raised only 2.6%, but their 20-year CAGR is 14%, but looks like they haven't been raising it too quickly as of late. Getting there. Number 16, City Holding Company, 4.55 quant rating, ticker CHCO. Looks like it's a regional bank in West Virginia. They have a dividend yield of 2.45%. They are unrated, small cap company, 1.9 billion. So probably under the radar of many institutional investors and a lot of financial analysts. They've had some pretty decent dividend growth. We don't have a track record of how many years, but it pretty much looks like they've been raising it since 2011. 6% 20-year CAGR average, but they did raise it 9% the last full year. At number 17, Leidos Holdings, ticker LDOS, 4.55 quant rating. It's a research and consulting services company, 1.04% dividend yield, 61 safety score, 10-year CAGR of -3%. We do not like to see that. They cut it in the mid-teens after a ginormous dividend raise, and it's just been slow growing. So honestly, I wouldn't even mess around with this one. Number 18, CTS Corporation, ticker CTS, 4.5 quant rating, 0.28% dividend yield, unrated safety score for this electronic manufacturing service company. Now, you're not buying this one for the dividend, and to quote a Disney movie, I would let it go, because this dividend right here is frozen. Forget about it. At number 19, this is a popular one with a lot of dividend investors, Essential Properties Realty Trust Incorporated, ticker EPRT, with a 4.5 quant rating. I believe they have exposure to movie theaters. They're a diversified REIT. I don't like all that movie theater exposure, but 3.59% yield, borderline safety score of 60, and EPRT has a 5-year dividend growth streak, 21%, very fast CAGR, but they raised it only 4% for their last full year. Once again, those links for Seeking Alpha to save $30 and to use Simply Safe for free for 2 weeks, that you just go on their website. In this floating little box next to my head, I talked with the CEO of Agree Realty, Joey Agree. Really cool interview. My guys from Dividend Talk got a question in there too, so I highly recommend checking that out. And if you do that, Joey and I will talk to you there.